Hello, everybody. Gbenga, Olatunji here. We are looking at the cost planning and control. We are still, of course, on performance management. How do we plan our cost? How do we control our cost? How to analyze our cost as professionals? How to forecast our costs? So these are what we are going to be looking at. Don't forget when we are talking about performance management or performance measurement, it's all about forecasting, looking into the future, and comparing our actual results to intended purposes. So this is what we'll be looking at today. Performance management information. What is management information? What is performance management information? Sources of information. Sources of information. So these are the jugglers we are going to be discussing today. What is data? Business information. What is information? How does data become information and becomes useful for business execution? Levels of information in an organization we'll be looking at. And of course, we've discussed this more in details before. So you could check on the previous performance management topics that we've discussed. We will also be looking at the strategic management information, tactical management information, and operational management information. Then what are the characteristics of a good information? And what are the character or future of information that will be required by these different levels of management in an organization? Sources of information. What are the sources of information? So we'll be looking at the internal sourced or internally sourced information, externally sourced information. What are their characteristics? Then we will discuss the methods of gathering information. Methods of gathering information. Like we are going to talk about observation, we are going to talk about interviews, using questionnaires, and in what situation will it be appropriate to use what method and the other? Advantages and disadvantages of one over the other we are going to look at. Then we begin to introduce ourselves properly into the figurative aspect of performance management, which is the calculative part. We are going to examine methods of cost planning, cost analysis, cost forecasting. So we'll be looking at today, primarily, we'll be looking at high and low method. We'll be looking at high and low method. And also, we will look at threats to professionals in business. What are the threats to professionals in business? Then next time we meet, we'll be going deeper into methods of, we'll be looking at high and low in details. We'll be looking at linear regression analysis and examples, marginal costing and absorption costing with examples and how to calculate them, and also ABC, that is activity-based costing, will be looked at. We are going to calculate all this in details. That is going to be on the next video. And we will have loved that anytime we release new videos, you receive alert from us. And for you to be able to achieve this, you will need to subscribe to the channel. And please, the subscription is free. So kindly click the subscription button as we go into the topics. Now, like us, comment, click the notification button as we go fully now into the lectures. As a business or businesses, we need information, whether internally generated information or externally generated information. But businesses will need and require information. So what is business information? Business information, in defining it, we must talk about data or business data. So data are information that have not been processed, or for better use of word, we'll say data are facts but yet to be processed. So data could be in different forms, in different places, kept under different conditions. So those are data. They are facts, but information. Data becomes information when we've processed it for a particular purpose. So it becomes meaningful. Information is more meaningful than data. Data are scattered facts here and there all over the organization. But when we process it together and make a meaning of it, we say it's a business information and it becomes information. So different cadre of management or staff in an organization, we need information to function. Every business requires information to function. So business uses of business information could be in various degrees, sizes, and the like. So to perform transaction, other process and invoicing and the like, you will need information. To make decisions, you will need information. To develop into a knowledge-based organization, we will need information. And that is why we see a lot of thriving big organization having big data. It's a big data, having big information. That is, the more we go for information or keep data in an organization, the better we know ourselves and the better opportunity we can harness. So when we keep data and process data to become business information, it puts the organization in a better position to leverage on knowledge of self-knowledge as an organization and self-awareness to go with full force into the market to dominate and to penetrate the industry. Different levels of management in organization will require different level of information. At the strategic management level, they will require information too for long-term planning, for strategic purposes. They will require information to make strategic choices. They will require information for strategic objective for the organization. So characteristics of management, strategic management information, it must be long-term in nature and is holistic about the organization, or at least the larger part of the organization. So information that at the strategic level that they will require may not be too much of a detail, may be in summary, but it is highly qualitative. Highly qualitative information is required at the strategic level by the strategic managers. It is generally relevant to long-term planning or purposes of the organization. Strategic management information will always look forward, always look ahead. Meanwhile, at the tactical level, they too will require information to plan, to execute, and the like. But it will be qualitative too, and maybe quantitative too. But either way, equally, it must be of a medium term importance. Maybe information about the next 1 year, often for the departmental head and for the operation of the organization. So it may be summary, but also it is going to require detailed level of information. It's going to look forward to, because every organization must drive and thrive for the future. So at the tactical level, they will need information too. And the information may be summarized, but it's not going to be as summarized as that of the strategic level management information. At the tactical level, they are going to need more of detail than strategic level. And they are going to analyze information and implement the usage of information more at this level. At this level, we'll be talking about information like capacity usage reports, sales reports, efficiency or productivity reports of employees, and the like. Then at the operational level, which requires more of day-to-day running of the organization, more of day-to-day implementation of an execution of projects in an organization. So the information will usually be detailed. Detailed information will be required. And it's going to be of short term in nature, even some on daily basis, daily planning. We want to do this, we want to do that, we want to plan for this, what has changed in the market. So operational information are very fluid, if I could use that word, very fluid information, and they need to be processed as quick and possible and need to be assessed as quick as possible. Usually they can easily find out information like this on the internet, and on daily basis managers quickly get information from various sources, both internally and externally generated, to ensure that they deliver on their KPIs. So now let's talk about sources of information. Basically, if information is not internally sourced or internally generated, it's going to be externally generated. So therefore, we have internal source or sources of information and external source of information. And whether it is internally generated or externally generated, information generally, because of the usefulness and importance of it to an organization for decision making, which is critical to success of an organization, it must have some characteristics. The quality of a good information is of essence. Like, information should be timely. It's of no use after we've decided, whether we now decided wrongly or rightly, we now have a better information of what we've decided upon. It's of no use. So timeliness of information is key. So information must be timely. Information must be reliable too. That is, information should not change, should pass the test of time. So information should be reliable. And for information to be reliable too, it is better we get it from reliable source. So the source from which we get information to is important to its reliability. And also information must be cost effective. It should not be too costly, as important as cost of information or information in itself, but it should not be too costly. Like in the other climb, they usually say $1 million information, $1 million worth of information. Yes, so the value that will place, or what the information costs us to get, should be more productive. we should be able to profit from information we get. If we are not able to profit from the information we get, then it's too costly. So information should be timely, information should be reliable, information should not be, the cost should be cost efficient. So when we are talking about source or sources of information, which is could be internally or externally. For internal, we'll be looking at within the organization, like the way that our accountants will be looking at the financial accounting records. It's a source of information. Human resource records. It's also a source of information internally. Production information, sales information, staff, maybe even BOD, board of directors, minutes of meetings and the like. These are internal sources of information. And also, when we're talking about external information or sources of external information, we'll be talking about information that we obtain or acquire maybe from our customer. That is external. And it's important for an organization to listen to and hear feedback from the customer. So information from customer is external and externally generated. Information we gather about our competitor or from our competitor, legal environment, the suppliers, political environment, economic environment. These are externally generated information and they are unique in themselves. E.g., organization should try to know what their customer actually wants so that they will know how to meet and provide for the need of the customer. Is then the customer will be satisfied. Also, organizations should know what competitors are doing so that maybe they can do something of that nature too and profit from the knowledge that is already available. The legal environment, how does it operate and affect the business? Political environment, how is it going to operate in the nearest future? How is it going to affect the organization? Organizations should try as much as possible to have all these sources of information, internal, external, and know how to go about getting them. And that is why it's good for the executives in organization to read market research, newspapers, trade journals, government reports, statistics, check the website, Bureau of Statistics and the like. What is statistics saying about your industry and the like? Published report from other organizations, trade bodies, market research. These are very good sources of information, and okay, if organization could do it, it project them and position the organization for better profitability. But we need to caution, especially when it comes to external information or externally generated information, because the information is not coming from us, it's not internally generated, so we may not be too sure of its accuracy, of its completeness. We may not be too sure whether it's really reliable or not, or detailed enough to meet our need. So when we gather information from these sources, we must do more of our due diligence and ensure we interpret correctly to suit our need, because such information could be out of date. So for us to have useful information at hand, we must gather it. So now we are discussing methods of gathering information. What are the methods of gathering information? And we'll be talking about observation. And it's good to observe. It's good to observe things. When we observe things, simply put, we are looking at what others are doing. So our involvement level at observation is usually minimal. we are not as active, no active involvement, but we are looking at it. So we say we are observing. So conscious engagement may not be too strong when we are observing or gathering information through observation. So we are looking at other people as they process things, as they do things, as they execute projects, as they carry on. Probably so that we can have information to how to go about things. But we are not the initiator when we are observing things. We are only looking at, probably with the aim of knowing what they are doing. So observation is an easy way of learning, but at the same time, when we observe, because the level of involvement is not that on active participation, we may not be able to get a lot of things right because we are not demonstrating it. We are not involved. And also, it may be time consuming because even those that we are watching and learning from may not even know that somebody is watching them or looking at what they are doing. So it may be time consuming, and even more importantly, we may not really get as useful information as we really needed, because what we are looking at, the event we are studying or the person we are studying may not even know that we are studying them or the market, and therefore the level of information that we get, it's possible we get qualitative information too, but one thing I'm emphasizing is the level of involvement when it comes to observation is very low and minimal. So another method is by interviewing. So interviewing is another form of information gathering method. And when we are interviewing, it connotes active consciousness. So we are active in the presence of another person, asking them questions, inquiring, making inquiry from them so that we can know about a specific things or things, transference of knowledge from them. So say we are interviewing them. Of course, as good as it is, because it gives us active and direct information and consciousness, probably and most likely from the source, instead from the horse's mouth. But the disadvantage, one of the disadvantage of interview is equally costly, is time consuming. That means you have to sit down with the person and talk, or you have to phone the person and talk. So either way is time consuming, is costly, and analyzing it too may take some time, because as the person is talking, you may not be able to analyze everything, and by the time the interview is executed or conducted and finished, you may realize that there are some other important information and questions that you should have asked. So it can lead to a bit of back and forth process. Questionnaire. Questionnaire is another form of method to gather information, and this one is may not be as time consuming as others, but the initial time of putting the questions together and in writing and in printing may be the factor. But once we've been able to achieve that, sending it out, which now we can leverage on electronic email and the like, so it makes it more cheaper and we can reach out to more people. Responses can be more voluminous than when we go out and interview and engage people one-on-one. So its interview questionnaire has its greater advantage in this. You can reach out to more people, can gather a lot of data in which then we come back to process. But of course, like every other method, questionnaire too has its own demerit or disadvantage. And one of its critical disadvantage is this: because it's not active consciousness, that is maybe being in front of a person and engaging them in questioning. We send maybe email and the like, or send hard copy to a particular place. The respondent may not respond on time, or may even ignore the questionnaire outrightly. And because we are not by their side, a lot of information could be lost. Feedback equally too, because we are not sitting there to know and observe their gesticulation and the like. The feedback actually may not reflect the true nature of things. It may be artificial. Answers, feedback may be artificial in questionnaire. And also, if by the time we are putting the questions down in writing, we do not structure it properly, the respondent may misinterpret. Don't forget, we may not be with them. So when they misinterpret our questions, they will give wrong feedback, which is not too good. So we had touched on a lot of things today. The meaning of data and how data turns to information, business information, levels of information required by different levels, like the strategic, management, tactical, operational level of information, the characteristics of information. We've looked at sources of information which can be internally generated or externally generated, methods in which we can use to gather information. Now we want to be going into another aspect, which is a bit of figurative, that is calculation. How can we cost plan? What method can we use to analyze or forecast plan, to forecast cost rather, for our organization? And we will start by looking at the simplest of them all, which is high and low method. We'll be looking at high and low method and how to go about high and low method step by step. Okay, here we are, steps when calculating high and low method. So these are the steps when we are calculating high and low methods. First of all, we need to identify the activity levels and its associated cost. Let me come again. When we are calculating high and low method, it is important for us to determine and identify the highest activity level and its associated cost. Also, which we can call the second step, is to identify the lowest activity level and its associated cost. So, identification, we start by identifying the highest and the lowest activity levels, and also the highest and the lowest cost. Then we move on to the third step, which is about calculating the variable cost per unit of the activity. The variable cost per unit of the activity must be calculated. Then we will be talking about how to calculate. We now say, ask ourselves, how to calculate what? Depending on what the question is going to ask us. So depending on what the question is asking us, but these are the important things we need to know. On the simple level of things, when we are talking about total cost, we will talk about the fixed cost aspect of it and the variable aspect of it. That is, total cost. Can we see it? Total cost. Let me broaden it for us to see. Okay. So on the simplest format, total cost is equal to the fixed cost that is the fixed cost aspect of the totality of the cost we are talking about, and the variableness, that is the cost that will always change, the element of cost that is changing in it. So when we had the changing aspect of the cost with the one that remain constant at least for a significant unit, then we are talking about the total cost. So we say total cost equals fixed cost plus variable costs. So this is the simplest of the equation. So then we can calculate too based on the cost function equation. Calculation based on cost function equation. Then we'll be talking about the fixed cost, the total cost rather, is equal to the fixed cost FC, fixed cost, plus the variable cost into brackets or multiplied by. In mathematics, when something is in brackets, it simply means multiplication. Fixed costs plus variable costs multiplied by the variable units multiplied by the number of units produced multiplied by the number of units produced. So cost function equation simply says total cost is the summation of fixed costs plus variable costs considering or taking into consideration the number of units produced. So after now, we will begin to demonstrate and go into the calculative part of performance management. On the narrative side, it is important for us to discuss too the threats to professionals in business. The threats to professionals in business, that is, threats that could affect us in delivering as accountants and practitioners in business. And we'll be talking about the intimidation threat, the self-review threat, the advocacy threat, the familiarity threat, and the intimidation threat, self-interest threats. So these are things that could interfere with our, or factors that could interfere with our independence and being professional or appearing professional to other people that engage us in rendering services. So what are these threats? When we are talking about intimidation threats, it's a situation in which a professional, by virtue of the status, maybe financial status, social status, the fame of the other party that engage him or her, it could not or feel a bit low of himself, or do not or could not deliver on his professional work by virtue of feeling of inferiority to the other party or the like. So that is intimidation. So, and anything could intimidate us, the status, the caliber, the position, and the like. So when we are talking about the familiarity trait, we are talking about getting used to the environment, and it becomes so normal to us that we forget ourselves being professional. So that is familiarity. Advocacy simply means taking a position to speak on behalf of another. So when we take a position to speak on behalf of our clients, if care is not taken, it can lead to a threat of our independence and judgment as professional. When we're talking about self-review, it simply means we do a particular or executed a particular project or assignment, and at the same time we are the one taking a second look at it, because review simply means taking a second look. So that is self-review. And last but not the least, when we are talking about self-interest, we are talking about when we engage ourselves in order to profit from ordinarily what we will be paid for. Like if, as an auditor, we took a loan from an organization in which we are auditing. At the end of the day, we are still going to audit them. So when we are auditing that aspect of the organization's operation, how are we going to do about it when even our own loan is on the list? So these are some of the threat factors that could affect a professional in business. So next time we meet, we'll go into details, calculation. So we'll be looking at high and low method, linear regression, which we did not talk about today. We'll be looking at linear regression analysis. We'll be looking at marginal costing. We'll be looking at absorption costing, and we'll be looking at ABC, that is activity-based costing. So if you are yet to subscribe to us, please go and subscribe right away. Like us, comment, GJAMES Associates. We are value to life. We are value to your businesses.